how much energy is involved with Russia. But I would actually argue the opposite, that we can replace a lot of that loss or potential disruption quite quickly and pretty painlessly. And so, but we don't talk about that, right? We just talk about, oh, we're going to sanction their energy sector, and then there's going to be this massive shortage. I mean, I had farmers convinced that crude was going to go to 150 a barrel in 3 days, and there would be no diesel available in our country within 3 months. And I'm like, what radio station are you listening to?
Welcome to Critical Thinking Required, hosted by LBW. This podcast is intended for free thinkers, entrepreneurs, and knowledge seekers. Join us as we discuss relevant financial topics, explore with guests their financial journeys, and engage with experts in industries such as space, media and entertainment, real estate, and many more. Buckle up and enjoy the ride. Welcome to Critical Thinking Required. You're with your hosts, myself, Tim Bickmore, and my two colleagues, Dan Weiss and Nathaniel Leach. And today we have our good friend, Jon, the Dude Crawford. Jon actually joined us on our podcast almost 2 years ago, Jon. It was April 30th when we released our podcast of 2020. So, which is crazy to think about. We talked about the crazy world of the oil markets and the history of the oil markets. Jon is the president of Crawford Oil and has been within that industry, I don't know, Jon, probably your whole life in all reality. And so we thought it was very pertinent to bring him back due to the unfortunate conflict within Ukraine versus Russia. And we want to talk a little bit about it. Our clients are asking a lot of questions just about that market in specifically and what's going on. So, Jon, thank you for joining us again. We really appreciate it.
You're very welcome. I'm glad to be back.
All right. So, are you ready for the first question? We're gonna kind of load this one up a little bit and see if we can get it going.
I by no means pretend to be a macroeconomics major or anything here. So I haven't seen anything. I mean, I thought the last time we were on, when crude oil went negative for the first time in history, that was the craziest. And we were in lockdown doing the podcast. I thought that was the craziest thing I'd ever seen. I think I even said that on the podcast. And now, again, 2 years later,
here we go.
Craziest thing I've ever seen. So
new ride. So the way we want to kind of structure this first question is really around supply, structural speaking, as well as demand, the qualitative, and maybe even some of the psychological factors that affect oil prices. And so the thing I want to ask you, first and foremost, is why are oil prices so volatile? Like, what's been going on? I know they're up, right? And we expected them to probably go up as Russia did invade Ukraine. Can you speak a little bit about why? Like, what's the expectations here? What's going on?
Yeah, no, a great question. I have been on the phone with all of my clients, I think, every day for the last 2 months. I feel like I've almost got this on like autopilot now, right? Because everybody keeps asking about it. But there's a lot to unpack, and it keeps changing every week. Like I do my weekly update. I'm always like, I'm not gonna have anything to write about this week because it's just kind of repeating. But then a ton of stuff just keeps happening every week, over and over right now. So I guess to take us back, for me, it goes back to Black Friday in November. We were coming out of to the end of the year. People were thinking about taking some profit off the table. Huge run in crude, huge run in equities, and people were like, with potential for tax rates to go up in the following year, people might bank their profits now. We saw OPEC coming back online and saying, hey, and I kept saying the same thing. I think the cheapest price of oil will be in February of 2022. And it's now the highest priced oil we've seen since 2014. And the caveat in all of that was what goes on with Russia. Now, at the time, crude tanked, sold off big. It reconsolidated a little bit going into the end of the year, and there was a little bit of a Santa rally, but nothing that really made my hair go up. Telling people, don't buy into it. It's the end of the year. It's usual. Just let this ride. Let's talk after the new year. And crude settled out at around 70-ish, I want to say. I apologize. I didn't look up the numbers at the very end of the year here for this, but it was nothing that it was outrageous. I thought it was a healthy price. Dyed diesel, as we say for farmers, was retailing, still under around 250 a gallon, which is a good mark for farming. They can usually make that work with their commodities in their corn or soybeans. And so, I was just like, hey, there's no need to contract. The futures pricing and current pricing are in a good balance. Just let it rip, And so all of a sudden, a few more troops show up. Things start, and you're just like, you keep it. And it's just this slow burn in January, to where you're like, okay, well, then what happened when I started to take pause was around the middle of January. Was Goldman Sachs out of nowhere comes on TV and says, oil is going to be $125 in 2 months. And it just sent panic. And then JP Morgan, Chase came out, same thing. They all started just raising their calls. Nonstop. And there's a lack of energy investment, even though Americans, Occidental Petroleum, right, the largest producer of shale oil, came out at the end of the year and said, we're going full steam ahead to start the year. ExxonMobil CEO comes out and says, this price is too high. We don't understand these economics. We're seeing crude to being in the 70s, falling down further into the 60s. There's a potential for a bottom to fall out at some point at the end of the year, depending on OPEC. So the producers are all kind of saying, the reality is that we're seeing things coming online good. The banks are saying no. I was calling that the banks were taking longer positions and trying to get greedy, because historically you look at Goldman Sachs and do the opposite, like take a long position opposite of what they say, and you usually win. And then the other thing was you had the Iran deal coming on, right? And so they were getting closer and closer talking about the Iran deal coming. Well, I don't think a lot of people know this, but the Iran deal is 2 million barrels a day of oil that's being held off the market right now. That's a lot. It doesn't sound like a lot, but it's a lot. It would be the equivalent of at the current rate, about 4 months of production increases from OPEC happening immediately. So you could take 4 months of gradual increased 400,000 barrels per day increases. So they would do 400,000 more in this month, 400,000 extra, 2 million more. You're talking 4 or 5 months, boom, like that. In addition to that, Biden wasn't afraid to use the strategic reserve. So you're going, why are we doing this? We're freaking out. Well, then the Russian thing gets a little bit crazier, right? And I think it was up to the point of, even when he eventually got into, so by February 14th, Valentine's Day, okay, WTI crude hit the highest price since 2014. At that point, Russia hadn't done anything, nothing. They had not entered or called anything on the Far East side, right, in the Donbass region. They hadn't done any of that. All they had done was saber rattling. That was it, just beating the drums. Nothing happened. On the 22nd, was it 21st? Putin claims that the eastern regions, the separatist regions, are independent. He moves in. Crude closes lower than it was the week before, when nothing had happened yet. Then he invades. Crude jumps up, guys. This was nuts to watch, because the market would open overnight, because you have to remember the fighting takes place on a clock, the 12-hour difference, 8-hour difference. So rockets would fly, crude futures would go up 8, 9, 10%. $8 a WTI, $9, $10. And then the morning would come and the aftermath would sit, and we'd see where we are. Things would calm down. and then crude would settle lower by the end of the day. So we've had this yo-yo constantly, back and forth, back and forth, back and forth. So I also was looking at saying, all my clients at this point, I've had a lot of people panic buy and they lock in, and I'm like, okay, if that's what you want to do, but I feel as if at this point you've already missed the train, you might as well ride this out. Another reason why. You look back at all crises that we've had in crude, and this isn't even actually a crisis in crude. They're just really, really making it a crisis in crude because of how much energy is involved with Russia. But I would actually argue the opposite, that we can replace a lot of that loss or potential disruption quite quickly and pretty painlessly. And so, but we don't talk about that, right? We just talk about, oh, we're going to sanction their energy sector, and then there's going to be this massive shortage. I mean, I had farmers convinced that crude was going to go to 150 a barrel in 3 days, and there would be no diesel available in our country within 3 months. And I'm like, what radio station are you listening to? And they would start to tell me. I mean, they were actually convinced, and so this fear kept going. So was I surprised at the invasion? Absolutely. I looked back at my notes and I'm like, you know what? I wouldn't have called it any differently. I wouldn't have. I'm still confident in my call that we're not overbought right now, right? But I still think that we're inflated. And I know it sounds like it's the same thing, but it's not to me, because war is naturally going to do these things for a little bit. But I'm still not convinced. And so, the invasion happens, and I'm up all night watching, going, I can't believe this is even happening. Next day, crude, gas and diesel prices were up over 22 cents a gallon in 1 day. I mean, I have not seen that since, oh my gosh, what have been a hurricane? I'm trying to think of the last time I saw a double digit like that. It was definitely back by 2014 on the run up. Oh yeah, the run up in 2014, and then the run up in 2008. That's the other thing. When you look at all crises usually last less than 6 months, most. Even when we went to 140 and it was $6 or $5 a gallon, people remember 2008 as if it was like $5 a gallon for the whole year. They think of that year and they think that, oh, we paid $4.50, $5 for a year. No, it was a ramp up, and then it was a pop, and it fell to, like, I think we got down to almost $1 a gallon for a hot minute there, right? So because Obama brought us cheap gas, so that was the whole thing. But we're already, if you think about this, everything was balancing itself out regularly, like under normal supply and demand economics, as I've been writing about for the whole last year, especially into the end of the year. Everything's been going as planned, the way I see it, until the Russian issue happened, which was around the end of November. So when you look at the fear factors and the volatility, what you talk about, Tim, where that starts to kind of like take over from the true picture of what's going on, we're already 4 months into that almost. So even with an invasion going on and unwinding, we know for a fact that this war in and of itself, and the way it's fighting now, can't last that much longer. Like it physically can't last that much longer. And then we deal with the unwinding of this. And we already have off ramps. We have a lot of off ramps in the energy sector. So I'm going, even under this worst case scenario, by Memorial Day, we're going to be in an extremely different spot than we are now. And I don't see us being in $150 crude area. I see us being less than where we're at now and moving lower into the summer and into the end of the year. It's a very contrarian call to what's popular right now. But I am just convinced at the capacities available from OPEC. And I'm also convinced, now this is a gamble on the Iran deal, okay? I am very convinced that we are going to cut an Iran deal. And China is really pushing for the Iran deal because if energy goes lower, it really keeps China out of this whole issue going on with Russia. Because if oil no longer becomes an issue talked about, China can stay quiet not have to say that they're supporting Russia, but not say that they're supporting the West. They can stay very neutral without a lot of heat. And that they can buy 2 million barrels a day from Russia. We will allow that to happen. That's not going to be sanctioned. We'll allow that to happen. They can stay where they're at. We'll keep our economic ties good because we kind of want that to happen too. We don't really want to disrupt our relations with China right now. So I do feel that the nudge from China and even Russia is pushing this Iran deal to get done, to take the heat off. And so when that 2 million barrels hits, you're going to see the last time that we cut a deal with Iran in 2000, was it 15? Was it the JAPA? Was it 2015? Crude oil dropped $10 in one day. It was just, well, and I don't think people are pricing that in right now. No one's talking about it. You have to like do a Google search to find that we're about to re-enter into a nuclear agreement with Iran. No one's talking about it. And it could happen this week. So I do feel that that will happen. Okay. And once that happens, we take Russia's 6 million, cut that down to 2, or take 2 away, right? 2 million more of that will go to China. That leaves 2 million barrels left. Well, the United States has still over 550 million barrels in strategic reserves. So do the math. If just the US, that's just the US. So even if the US gave out 2 million barrels a day in exports, okay, or allowed country, and rather than taking the imports for us that we could actually move imports to others and then release strategically to ourselves, and other imports that we would take in, we could allow to go to other countries. We could do 186 days on that whole strategic reserve and have no oil in the market from Russia, none. Now, that would be us taking the whole part of the reserves. And we won't do that. There's 17 nations with reserves. And they're meeting right now. And they're going to announce the strategic reserve releases tomorrow. So the reason why I'm bringing that up is last week, Russia invades, crude pops, it goes to 94-ish a barrel. The last close was 95. So it was close to the pre-invasion high. The next day it dropped. As much as it went up, it dropped because Biden came on TV and said, we're not going to go after the banks. And I'm not afraid to strategically release oil. So what happened today? We're going to sanction things. We're going to, people are worried about the supply issue again. Everything's going up again today. It went up 15 cents a gallon. Crude just popped. 96 a barrel. Now we surpassed. Biden does State of the Union tomorrow. Guarantee you what's going to be talked about tomorrow night. Strategic release of reserves, all these things, and you're going to see crude completely fall back down again. We are yo-yoing. We still haven't closed above $100 a barrel. Still, we have not closed above $100 a barrel. And we're in this full conflict. That being said, I am not convinced that with as far as we are into this conflict, and we still have not been able to break $100 a barrel on fear, I don't see this playing out long-term for the year into 125 plus crude. Okay, sorry, that was a extremely long answer to your question, Tim. And I see Nathaniel has a question, so.
I do have a couple of follow-ups. So
yeah,
this is all very interesting when it comes to oil. So when it comes to, though, a good portion of the EU, from my understanding, I thought that they were reliant upon Russia for their natural gas, like the Nord Stream pipeline. So this is a different topic than what you've been speaking to, correct? Okay.
Correct.
So my question then is so logistically supporting what about when it comes to the natural gas? Do you have any thoughts on that?
I have some thoughts on natural gas. I'm by no means an expert in the natural gas sphere, but I have done some more reading on this, and I thought it was funny because this is accelerating quite a movement into energy independence now for a lot of countries. What we did after what happened with OPEC in late 2008 it accelerated our shale oil revolution, right? And so this is accelerating Europe's move to independence. I don't know if Putin would shut off the valves. I don't know. And that's that he can shut off crude, and we can get around that in the next in a month or two. I don't have a issue with that. Natural gas, that's a tough one. We don't have the ability to just fix that. Germany is going to install, and they're not installed, they were working on it, but they're going to rapidly look to increase their liquefied natural gas importing at their ports, 2 facilities. The United States built those during the Obama administration, and it's been a game changer. Would we be able to, between us and Saudi Arabia and UAE, would the 3 of us be able to supply all of Europe? Yeah, we would. We would all together be able to replace all that. We just can't do that in the next few months. So natural gas is still a wild card, and with how kind of, I mean, Putin he's a good chess player, but this one just seems to be a little bit more off the rails than normal. So
I've actually heard that the chess player might be an incorrect way of thinking it. It's more about judo, apparently, because he's
interesting. That's right.
Yeah,
that's right. That's right, Nathaniel. I heard about this.
You're the same thing?
Yes,
yeah.
Yes, I did. Yeah, saying that he hates this chess thing, that he is like a master of judo, and that's his. Yes.
And it's about give and take.
Yes.
It's about using your opponents against them.
Exactly.
I think that's how he thinks.
Yes. So if they push back on you, you use that as a strength to move. Yeah. Yeah.
Exactly.
And so it will be. That is a wild card, and I don't know. I mean, it all hinges upon if the Ukrainian people can hold Kiev and other major cities. If they can actually hold this, then I do not see this massive blowout in energy cost, because I just don't.
So on the natural gas piece, as you said, it's not possible to be able to create a source of supply and logistically support Germany and I'm not sure what other countries within the EU for their natural gas needs. So as you say, this could lead towards independence from energy from being imported from hostile countries, such as Russia in this case. How long do you think well, 2 questions. One, how long do you think it would take to build up that infrastructure to support natural gas imports, and at what cost? And then second, do you think that it was a mistake for Germany to decommission their nuclear power plants or alternative energy, those kinds of green energy after Fukushima?
Okay, so to answer your question, I believe based on the United States and how they did their build outs, I believe Germany could get that completed. So once it's in, they take the liquefied natural gas and then it gets converted, and then they can pipe it in. So they have the infrastructure in place. It just needs to get from the ship into the pipeline, right? So I honest to God, I'll bet that they could get that done by the end of the year. I do. I really do, because they'd already started it. It's just that now they're accelerating it. So I think if they go full steam ahead, I think it's something that they could get done, maybe not in time for next heating season, but enough to be a negotiating chip. That's the other piece of this. And then as far as shutting off the nuclear, I mean, I am so pro nuclear, it's ridiculous. I don't understand this. So I read a book on Chernobyl. Fantastic. I mean, you can just see it is organizational destruction all over it, how this disaster happened. I mean, it's very cut and dry organizationally how this happened, from communication to everything. And from my understanding, a lot of it was the same in Japan. It wasn't bad nuclear. It was so many other parts of it that should have even happened. It should not have happened. And this huge jump to move. No, I disagree. I don't think they should have done it. And if they didn't, they would be able to convert so much right now instantly to electric heat. Anybody who's still in the electric thing, you got electric heat, no problem. You got your nuclear going. It's the other problem with this too. I mean, this gets into the whole like green side, which we're probably going to get into a little bit. The biggest problem that Europe has was that, and the same thing in the UK. You could talk to my sister over there because heating your home, like it tripled, right? They underestimated how much energy they were going to get from the wind farms that they put in. So they did this like calculation on their solar and wind, and they said, great, that looks good. And then they closed all the natural gas plants. They just shut them down. And then they go, oh man, we kind of underestimated that. And now we're not getting enough. And they can't open them back up that quickly, you know? And so, and that's what's starting to happen here. You know, I've been fighting this in Wisconsin. We have the cleanest burning coal plant in the country in Columbia County, where my business is. And I've been raising flags. I've called down to the commissions and I'm going, what are we doing? Like, you build the solar farm, you keep the coal, you cut your coal consumption in half, if not more. But we don't know yet. They like watching what's happened in Europe, what's happened on the East Coast through these storms. We just don't know. And so they wanted to literally put the cart before the horse, decommission, shut down, build, and move forward. And it just got paused about 3 months ago because somebody raised their hand and said, you know, hey, we're all about trying to limit our dependence on coal, but what is this cost going to be what's the risk to our consumers here in Wisconsin? And they said, well, everyone's heating and electric bills will go up 2 to 3 times, 2 to 3x for 5 years. And then it might come down. And we said, I've never known a utility company to tell me that the prices will come down. They never go down. So somebody finally got through, and like I said, I think we should still build the solar farm on this property that they've got. I think they should, but not close down the coal plant yet. We should cut back to the point. And so I know we're kind of going off here, but this does lead in with what's going on in Europe, because they are in a little bit of this crunch because they did invest heavily in green and they decommissioned their fossil fuels too quickly and their dependence on nuclear too quickly. And now they're kind of like held hostage on natural gas. So,
and I think that leads me into my question, which I'm glad you kind of went there. And it's more of a question about rig count and like active rigs versus not active rigs. I know before this call, we showed you a little bit of a graph and you were kind of giving us our 2 thoughts. And I'm just curious, I've heard similar things on the edge of like where the United States is with this Ukraine versus Russia conflict, is that we can't just go ahead and turn on our rigs that quickly. And it takes a long time for rigs to get up and active. So for us to produce those barrels is going to take more investment, and we haven't had the investment, right? It's kind of that, I think you mentioned earlier, like fear mongering on that specific topic of that we haven't invested enough to spin it up too quickly. And I'm just curious on your side of things, is that I've heard, hey, why don't we just put all this towards solar and let's get everybody in the United States on solar or alternative energy versus turning these rigs back on. And the reason why I want to ask you is you seem to have a little bit of a different opinion when it comes to rig count, active rigs, and like what that really is looking like. So I'm just curious on your thoughts on what's really going on with this investment type situation. You mentioned our reserves we could deploy our reserves, but can we build them back up?
Yeah.
Like, and all that kind of in that side of things.
So let's cut back quick to our last podcast together, right? April of 2020, US had become for many months peak oil producer in the world. we took back our #1 position, and we were just hooting and hollering. We were drilling left and right. We were fracking where we didn't need to frack. We were just frack happy. And COVID hits, things dry up. It's just a disaster. OPEC cuts 10 million barrels a day production. That's almost the entire United States oil production. We were at like 12.8, I think, around there when we peaked. So almost the entire United States shutting off like that. So then OPEC decided to come back on. Okay. There is some weird break-even points for the US, and the numbers come and go. But I think what's so funny about a lot of this, there's two things that happened. One, OPEC started bringing oil back to market, and really slowly, very slowly. They said 400,000 barrels extra per day in a month. So take 10 million, or 10 million divided by 400,000, right? 4, 8, 12. That's how many months. There you go. What was that number again, Nathaniel? Sorry.
25.
25 months. So it would take them 25 months if they went at that rate to get back to where they were. So the American producers took it in the shorts, as you know, during when this happened. And it had still been a very wildcat environment. And so Occidental and these others looked at the year going, look, demand is really screwed up. We have no way, we have no idea what's going to happen. So they decided to be very firm. And that's the other thing about this. They were very transparent. The oil industry was very transparent in 2021 and said, we are not going to drill. We are going to return capital to our investors. And then we'll go back to drilling in 2022. I mean, they were kind of like shrugging their shoulders going, why is everyone saying we're not doing this? We're being very honest. We need to start returning money to our investors. Crude prices are high. We can pump less oil, make a lot of money, save on our cap expenditures for at least a year, return a ton to our investors who stayed with us during all this stuff. And then we get back to business in 2022. That was the plan. And so when you look at the rig counts going up near the end of the year, you guys should see how many millionaires got made down there. You know how many people graduated college and went and started drilling just 1, 2, 3, 4 wells? Tons. Wildcat, all that buildup that you saw in 2021, those were all wildcats again. Now Occidental's back in the game. So what you're seeing is now we had the largest rig count increase. I think it was almost 14 to 20 rigs a week or two ago. Why? The big boys are back. And they're being very honest that they're coming back. Now, you're not going to see the level of them come back as quickly because technology has already gotten better. They're able to extract more. They're able to reopen other wells, that they've already had. But now you have the combination of wildcat and the big boys down there, and they're going to get back. I think we will hit peak oil production again where we were at in 2020 in February. I honestly God think we can get there by the end of the year. By the end of the year. I do.
So where do you think that this idea of the United States not investing enough within our rig count is that? I mean, where is there truth to it, or is there some validity to that statement that there's not been enough investment within oil production to get us to a point where we're kind of that true independence and Russia won't affect us as much?
Well,
And if I could add on that,
yeah.
true independence and alternative energy production as well. And then also maybe it's not enough wells worldwide, perhaps?
Well, it's weird because it's so hard to figure out where is world oil consumption going. I mean, the IEA has changed their prediction, if you can take it. Like, which way is the wind blowing today? They're thinking we're going to be in deficit. I mean, everything was showing that we would be in surplus by around this time, and if all this stuff hadn't happened, we would be definitely in surplus by May. We would be in surplus production versus consumption worldwide. There's all this talk of from jet fuel and everything. And I'm sorry, I just don't feel, even with the pent up of people traveling, we still have had decent travel. I think business travel is forever changed. I don't see the level. 25% of travel was business. From my understanding, 25% of daily travel on airlines is business related. I don't see how all that's coming back ever again. We've changed the way in which we do business. That's a huge, huge demand. Okay. So how do you make that up? We're not driving. We are, but we're driving more fuel efficient cars, and we're starting to move to electric. I mean, so this idea that this lack of investment, I feel like it's actually, no, they're actually just being smart. Oil companies are going, why should we spend billions of dollars looking for oil in certain parts of the world, or especially deep sea oil, when we can be investing more in alternative energy, try to capitalize on that. We have enough oil production with the ability to supplement with green energy to get us to the finish line. It's just a matter of logistically, how do we do it? I don't think we need to be out there doing more. It's kind of, I don't follow it. I've heard both sides. I just don't agree. And people can argue with me. And I know they can prove it on their paper and say that, no, we're going to be in deficit forever if we don't do this. And I just feel as if we have enough capacity, because we still have, okay. Right before the pandemic, UAE completed an additional 1 million barrel per day export upgrade to their facility. Haven't even touched it yet. I mean, there's just so much oil, and now, but to Nathaniel's point, you guys too, let's get back to this little independence for America. At the current rate in which we are producing, would the United States be able to completely 100% supply ourselves only? No. We would still need to import, and a lot of it is still logistically based upon the East Coast. The East Coast does not have the means to get our Bakken and our Permian Basin crude only by rail, and then they would have to recalibrate all of the refineries to take all these multiple different grades of crude. So as of right now, we still take in Saudi Arabian crude because it's easier, and we could maybe do it. But I mean, if we supplement in with electric in the next 5 to 10 years, I mean, I do think the United States could eventually easily take care of themselves 110%.
Do you think, so kind of going to the green energy question, do you think that the United States, or the world for that matter, is truly ready for true all green producing and utilization of green energy? Or do you think it's going to be a while to transition into such? Because I know we've talked in the past on the back end where solar panel sounds great, like solar energy sounds great, but there's also issues with like wind production as well, that if you have, depending on the climate, like the Northeast, it can cause issues. Our electrical grid, I've heard from many places that it's not up to date. So like, where do you think we are from the standpoint of actually being able to even utilize and produce that energy to be independent? I mean, you could even say the UK too. I guess you're mentioning them as well having issues.
Yeah. Oh yeah. I don't know enough about Europe to comment on that, other than that I don't know about their grid system. I don't know anything about that. The discussions that were had over the weekend from napkin math with all so we have 30 trillion about, right, in national debt right now. If we wanted to put solar panels on every home in America, it'd be about $2.4 trillion, and we'd have solar panels on every home in America, which is the price of the Build Back Better, right? If we wanted to redo our entire electrical grid in the entire United States, it would take $5 trillion. So almost a third of our quarter of our entire national debt we need that much to invest into to go like fully green and be efficient. It just shows you how, in my opinion, how we haven't been very tactful in how we've done our spending. Because if we make energy cheap and we become the cheapest energy producer, we win in almost everything. It gets back to, China's onboarding, what, 50 or 80, is it, nuclear power plants in the next 30 years? And they've got their nuclear power plants down to a $3 billion per plant cost. And they will go from a national average of 9 cents per kilowatt hour down to sub 4 cents. They will cut their energy cost in half in 30 years. So if we don't cut our energy costs in half, guys, how do we compete? So my point is that we don't have any money to do this. That's the problem. We overshot, in my opinion, at the very end. We overshot on the COVID spending at the end. The first part, disaster, I get it, I'm all in. We went, to my opinion, a little too much at the end. We threw that little kicker, the little extra 4 trillion at the end we probably could have saved. That last thing we did could have put solar on every home. So which gets me to that point, Tim, I was telling you this morning, I had that text I was thinking about in the shower because I'm such a nerd and this is all the shit I think about. But I was like, why are we subsidizing $7,500 on an electric car credit when, one, access to capital in like buying a car it's pretty easy, right? It's pretty easy. The thing is that we have no infrastructure to charge the car yet. Well, if the person can afford the car, they can probably afford the extra $7,500 car. Why not give them the additional $7,500 to supplement further on putting solar panels on their home so you can charge the goddamn car? Why are we discounting the car? Let's build the goddamn infrastructure. So the government does these rolling back rebates on solar. For example, my home, it cost $40,000 5 years ago. It cost $30,000 3 years ago. This last year would have cost me $20,000 to do it at my house. 21-year payback. Remember we went through this exercise or something? I think Nathaniel too, we looked at the paybacks and we decided it wasn't worth it. Throw another $7,500 on top of that if I bought an electric car. Now I get close to making that work. And now I'm charging my car for free, through my. So now you incentivize people, if they buy their car, they'll be able to actually put the solar panels on their home, which is exactly what we need. So I'm like, we're subsidizing in the wrong areas, in my opinion, and we don't have the money to do it now. So this is why ExxonMobil and other the big oil companies are looking at this saying, there's some money to be made if we do this right, and they're pivoting. So why would the upside in oil, there's so much more upside in others. They have enough known capacity that the CapEx in that, there's greater upside potential in other forms of energy right now. And that's just my opinion. So I think that we could get there, but like I said, it would take, $2 trillion. $2 trillion would get us a long ways. And I don't agree with building giant solar farms. I think it should be done at the house to business level, large, like, Amazon sized buildings, rooftops. I think we do that. And then we supplement in with, ideally, I'd like to go nuclear, but that's just never going to happen here. But we need to get our energy costs down, And like Tim, like you said, I was showing you, but does it really matter if we don't have the ability to store it or efficiently transfer it? Because like you've seen, anytime we have a storm, we lose power for days and days and days and days and days on it.
So it's complex problem to solve.
Yes,
it's not just about going green. It's also about the utilization and efficiency.
If you rely upon a production point, not at the home level, but a business type, like a larger field within business, now you lose power. If you have 40% of your traffic, all your needs are based on charging on electricity, and we can't even move electricity around. What are we doing? So yeah. The whole electrical car revolution is great. Like, honest to God, I like it. They're fun to drive, and I think it's a good thing to move towards. But it's like we're subsidizing everything, to me, completely ass backwards.
Yeah, because you have to go infrastructure first and then be able to have the things to charge. That's all great. I think that will kind of take us into the point of kind of doing our wrap up. And as you know, John, we like to do a round robin and give everybody kind of final thoughts. Dan, do you want to start us off with your final thoughts?
Things I think are just not always as simple as maybe some people put it out to be. So it's fun to hear all the nuances at play that are really driving something in a particular way. Sometimes doesn't look logical and isn't logical to begin with. So that would be my takeaway from this, is that things may not necessarily be what they seem.
I guess I'll go next, and then I can let you go. And we'll let John always take the last thoughts. First, John, thank you again for joining us. And I love listening to your thoughts and your opinions when it comes to this side of the world. I don't follow it obviously as closely as you, but it's fascinating to hear what at least we read from the headlines. Like you said, hey, we're not investing enough. Well, why is that? Your opinion makes me pause and think about it. Say, oh, maybe we should look a little deeper into that. What's really going on? And I love how you're talking about how the oil companies are raising their hands, being like, hey, we were completely honest about what we're doing. And it kind of makes sense. And to me, it sounds like from an oil perspective, it's there's enough capacity to alternate and shift obviously trajectories from fossil fuels to potentially green energy, which is fascinating in itself. And if you think about it in that way, it makes sense that why would they continue to invest if they're going to pivot and there's enough oil to drill because of the efficiencies that they've made, which is fascinating. And I do like the thoughts of the infrastructure. I've heard that from multiple different sources on how our infrastructure is not capable of potentially going completely green in ways, and how we need to increase that like first and foremost to be able to get there. And the subsidization is interesting. I did like that tidbit. But I will echo Dan. I think that as always, it's very nuanced. It's a nuanced situation. And what I think you love about the oil markets and the commodity markets is that it's complex. It's a complex system. And those complex systems have a lot of nuance to get to the final answer. And like you said, what was the probability of everybody thinking Putin was going to invade Ukraine was pretty low from a lot of people. A lot of people didn't think that was going to happen. And look, it did. And now all of a sudden you have different information to start kind of making your thoughts on where things are going to go. So I thought it was just really great. I always learn a lot when you talk about your stuff. So I really appreciate it. Danny, you're up.
I'll just echo Tim's comment about like we've spoken about multiple times in the past, that markets are complex ecosystems, including energy markets. There's a lot of incentives, issues at play that you just can't possibly understand if you're just a passersby and just reading the news, or just listening to the talking heads, the commentators on cable news. You have to do your own research. You have to go to the primary sources for information. And above all, you have to be rational in your actions that are based off of that well-researched data. You have to do the work and then make decisions accordingly. And a lot of people just don't do that before they make decisions, which is unfortunate. And I think that, to your point about putting a solar panel on every roof, it's a very interesting concept. And it then makes me think to ask the question, what is incentivizing the federal government to be issuing these reimbursements in the first place for buying an electric car versus your idea? What made them come to that decision? Makes me think there were some lobbyists involved.
Yeah, I think the big three were a big deal there. And I know Tesla has, been rewarded handsomely with this. So, no, I just wanted to say again, thank you guys. I love coming on here and talking about this, but yet I hate it, right? Because at the end of the day, I listen to all this, think about the last 45 minutes, and I just go, it's such a crapshoot. Like, it's such a crapshoot. And it's such a great business to be in, because you can be wrong and it doesn't matter, because you can just say, oh, well, Russia invaded Ukraine. Sorry, didn't think that would happen. There's always these excuses, but I do think there's a way out. I think there's a way to soften the blow in the energy world, even with this crisis going on. And I also do feel that the world is, especially coming out of the pandemic, that the world actually is a lot closer than it was before. As much as we don't want to talk about, I really do. I think that you're seeing countries work together. You're seeing actions being taken that have never been taken before from countries, and really taking these stands together and saying what we're seeing is wrong. And we're all going to work together to make sure that we get through this, no matter how painful it'll be, that we'll get through this. And so I'm optimistic as much as I'm sad. I'm optimistic that we have enough tools in the box to make sure that we don't wake up tomorrow and Americans are paying $4 at the pump. I really don't see that happening long term. And I still am confident that the world will figure this out together, and hopefully get back to, God willing, some sense of calm and normalcy by the start of summer. I know this conflict's going to take some time to unwind, but at least from being front and center to this level, I think that we can hopefully start to move on sooner than later. So.
Perfect.
Yeah.
Well, Jon, thank you again so much for joining the podcast, and thank you to all our listeners and viewers. I forgot to mention this when I opened up, but if you do like our content, you like what Jon said, please share, subscribe, and like what we do. It really just helps us out. And with that being said, I hope everyone has a great night, and we'll talk to you soon. Thank you for taking the time to start your journey of thinking differently and listening to LBW talk about stuff they love. Until next time.